Welcome, mobile traders. And for today's topic, I want to talk about players of the stock market. This is a very interesting topic. I feel like a lot of folks that teach don't really cover this the way that I'm about to cover it. I look at it like players in the stock market being the game, whatever market you into, forex, crypto, commodities. You have to know the type of minds, the psychology of the folks that's actually investing and trading and all that. So I got it broken down into different sections. Let's start with my section one. We're going to start with the investors, right? When you think of investing, you're thinking years in advance. You're thinking 1 to more years in advance. Investors focus on fundamentals of companies, like, the leadership of the company, the earnings, if the company is a growth versus a dividend company, if the company has a moat. Basically what a moat is something proprietary in that company. For instance, a patent of some sort of like a medical pharmaceutical company. Investors are long-term, cross-country marathon runners, if you will, right? If you watch an Olympics, if you ever watched the Olympics before, you have those runners that just run the whole time, run a whole entire Olympics. It goes to a commercial break and comes back on, they still running. They're not worried about short-term trends. They're worried about the long-term trends. So price will go up, price will go down, price will go up, price will go down. But as long as they feel comfortable into it, they did their research. Investors are in it for a long haul. So that's the mind of an investor. Eventually, I feel through trading, through teaching my students how to trade, I want you guys all to become investors because that's, I want you to have equity in a business and things that you purchase and use every day. I want you to have equity and ownership in that business because that's the long-term game when you can actually create a portfolio and, make money by just sitting there. So when I teach people how to trade, it, eventually open up doors to people investing, right? So another thing when investing, investors also can identify, great investors can identify long-term versus short-term trends. And the two stocks that I'm going to use for an example, GoPro, right? GoPro for the short term, and I'm going to use cruise stocks for a long term, like Carnival Cruise. CCL is one stock that I'm looking at for cruises. So short term, right? The short term trend, the reason why I always used to think that GoPro was a short term company because it didn't have much but the cameras. So think about when GoPro first came out. If you're not familiar with it, GoPro was a company that revolutionized the way that, I guess, skateboarders, BMX riders, people that do like extreme sports and activities could wear like a camera on top of their head that was weatherproof and all this other good stuff. That was all GoPro had to offer at the time. So, of course, when it first came out, like anything, it catches on. It's great. People buying it. But me, I was always looking at it like this is a short-term trend because while GoPro was coming out, you still had Android phones and different devices that started to come out with cameras, more advanced cameras on the phone, cameras that can do slow motion, and the pixel of the camera start to evolve. So I was looking at phones and tablets and everything like, wow, I think that this is catching up to the GoPro and eventually will surpass the GoPro because not only is it just a camera, it's a phone as well. You can do multiple things with phones. GoPro could just do one thing. One function is it's a camera function. Now you look at GoPro today, it's not quite a penny stock, but they're trying to find different avenues. GoPro is now looking into like drones, like one of the new waves of the future, drones and things like that. So that's might be something I'd be looking. That might be a stock that I'm looking at now to get into GoPro because of the purpose of that. But I always looked at it as a short-term trend versus a long-term trend. So if you look at cruise ships, every year, 2000 and up, statistically, the math shows that more people have been taking cruises. cruises, and it's been getting bigger. It's becoming more lavish. Now, due to the coronavirus, of course, all that came to an end, and the stock plummet. The cruise stocks plummet. But if you look at the projections, you can see that that's a long-term thing. More and more people are taking cruises. So that is a long-term trend. A short-term situation like the coronavirus happened, which will have long-term results, I feel like, on certain sectors and certain industries of the markets, like maybe real estate and things of that nature. But you got to look at the long-term trend of it. Airlines, for example, more people flying, traveling. Airlines are down right now. But in the long haul, you can expect more people to travel more because statistics shows that more people are traveling. That's a longer term trend. Boom. So that's what we got on investors. Now we're going to move over to my traders, right? When it comes to traders, we have day traders. Day traders make trades the same day. Intraday. You hear that word, that means basically the same day, the in and out. Swing traders and position traders, which we are. Swing traders trade days into weeks. Position traders trade weeks into months. Okay? What I want to say about day trading, don't day trade. It's trash. Day trading will not make you money. Two big reasons why I say that. It takes a lot of money to make money when you day trading. And it's this rule called the pattern day trader rule. Basically, if you want to look that up, I'm not going to go too much into it, but you have to have a certain amount of money in your account to make multiple trades during the day without being flagged. If you're flagged and you have that money in your account, if you have $25,000 in your account and up, you can trade as much as you want. They'll flag you as a day trader, but they won't penalize you for it. Everything will be cool. If you have $24,999 and down, that account is a small account and they won't allow you to make more than 3 day trades within I think like a 7-day cycle or something like that. Like you got to really look it up to see. But basically, day trading will make you lose money unless you have a large amount of money. And even folks that I know with large amount of monies that day trade still don't become as successful as the guru day traders that's on YouTube. The ones that people believe, they making money off of the program that they sell. They're not really making money off of day trading. Day trading, penny stocks is garbage, in my opinion. But if I day trade sometimes in a very special way when it comes to options. Like when it came to GameStop at AMC, I day traded that with options. But like I said, day trading is intraday, same day. So I was in and out the same day. But we won't be doing no day trading with this program. So you see that big X though, we scratched that out. But I just had to go over what day trading is. But we will be doing swing and position trading, right? When you swing and position trading, us as traders, it allow us to focus more on fewer trades for better results. There's 252 trading days in a year, and we got to make it count to reach our target goal. We move over to the next one. We have unaware people. And this is the majority of people that I know that trade stocks that's been doing it for a while. The majority of people that call themselves professional. The majority of folks that just in the stock market are unaware people, in my opinion. And what unaware people are, they're people that follows whoever says buy, sell. They don't have no understanding of the stock market. They don't have no plan, no format. They just in and out. They can't tell you how many trades they want to make a year. They can't tell you their most profitable trades. They can't tell you, some of their favorite trades that they make. They can't tell you anything. They're unaware. So these investors, these traders, all take advantage of these unaware people. There's a lot of unaware folks on Robinhood. There's a lot of unaware folks on Webull. There's a lot of unaware folks on Moomoo. Especially, I name these three because they're free commission apps and they newer brokers. So when something's new and it's free, a lot of folks just join on and say, all right, let me throw a couple dollars at it without really understanding the psychology behind it. So that creates leverage for us being aware traders that if we see something like a GameStop again, a AMC again, we know exactly what to do with it. We can get in and get out. So zoom out right quick, give you a bigger picture. Like I said, these are the players of the stock market. And stay tuned for the next video.